What is up guys, my name is Ignas, welcome back to the channel. Last week we've compared a few dividend paying semiconductor names, and now I would like to take a deeper look into Microchip Technology, ticker symbol MCHP. On the year to date the stock is losing over $20 per share, minus 23.49%, but if we scroll out to the last 5 years, it was trading at just under $45 back in 2017, and went up to $67.47 now, up for 50.46%. Company's market cap is at $37.25 billion US. We are looking at a price to earnings ratio of 24.72, and the stock is trading at a dividend yield of 1.79%. So to look into the stock further, we'll check financials and fundamental ratios, where the analysts think the stock will be trading next year, what Superinvestors and insiders are doing, and lastly we'll check into the technicals of the price chart. Show support with an early thumbs up, and with that out of the way, let's start. The first thing I want to take a look into is revenue, and we have Microchip's revenue history of the last 5 years. Back in 2017 they were bringing in $3.6 billion on the trailing 12 months. Then a year in 2018 that increased to $4.2 billion. In 2019 we had it at $5.5 billion. Then in 2020 there was a bit of a decrease, minus 1% for the quarter year over year, coming in at $5.3 billion on the trailing 12 months. But after it kept on going higher. In 2021 it is at $5.7 billion. And with the latest quarter in 2022, we now have it at $7.2 billion. So revenue has been moving up to 2019, but we didn't see that slump of 2020, as the numbers just kept on going sideways. But 2021 and 2022, we are seeing revenue going up consistently, with now the largest quarter of the last 5 years at almost $2 billion. Now the second metric we are taking a look into is price to earnings. So back in 2017 it was at 36.35, then in a year in 2018 as earnings per share went down, price to earnings increased to 182, and in the third quarter of 2018, earnings bottomed at 4 cents per share, so we saw the price to earnings ratio skyrocketing to 930.51, but after that it quickly went down. In 2019 earnings was at 74 cents, so price to earnings comparatively went way down to 56. Then in 2020 we saw earnings go up to $1.25, so PE going lower to 40.91. 2021 the share price surged to 73.56, price to earnings ratio at 85.54, and after as earnings started moving up, where in 2021 we saw it at $1.70, with the price per share topping at $86.04, so price to earnings did go a bit lower to 50.61, and now with the most recent quarter in, as the price is bouncing a bit, we have the price to earnings at 24.62. So in the last 5 years, there were only a few quarters where we did see the price to earnings under 30. One was in the beginning of 2020, and then we only saw that in 2022. So the ratio bottomed in the second quarter of this year at 21.26, and currently we do have the second best price to earnings ratio in the last 5 years. Now the next metric I want to take a look into is the number of shares outstanding, and at first glance it doesn't look that good. In 2017 they had it at 486 million shares, then in a year in 2018 that increased to 504 million, plus 3.7% for the quarter year over year. In 2019 that increased a bit to 508 million shares, 2020 516 million, but then a huge increase of almost 10% in 2021, with 565 million shares out. Now with the most recent quarter in 2022, there was a small decrease of minus 0.53% to 562 million shares, but overall in 5 years they have been diluting shareholders, as they have increased the number of shares outstanding by 76 million shares. Now let us take dividends. So in 2017 they were paying 67 cents per share, with a dividend yield of 1.57%. Then in a year in 2018 the payout increased to 68 cents, so as the price did go a bit lower, we saw the dividend yield going up to 1.96%. In 2019 the dividend payout was at 71 cents, but the price did go a bit higher, so the yield went down to 1.61%, and not much change with the payout in 2020, so we saw the yield again going lower to 1.16%. Now as the stock price went closer to $80, the dividend yield bottomed in 2021 at 0.92%, but after that it has been moving higher. In the beginning of 2022, the dividend payout increased to 89 cents per share, so as the price went a bit lower, we saw the dividend yield increasing to 1.26%, and now that we have the dividend payout at $1.05, the dividend yield also went up to 1.57%. So they have been increasing on the dividend payout in the last 5 years, and that especially accelerated in the beginning of 2021, together with an increase in the dividend yield. To further check on that, we'll use my watch list on Google Sheets. So we are now in my dividend investing watch list. We have that same dividend yield history of the last 5 years, and we can calculate that on average in 5 years the stock was trading at a dividend yield of 1.46%. So the best time to get into the stock was back in 2018, where it was trading at a yield of 1.96% over the 5-year average for 33.94%, and the bottom was in the beginning of 2021 at 0.92%, under average for 37.13%. But if we do take the stock right now at 1.79%, that is quite there over the 5-year average for 22.32%. So it seems to be quite a decent opportunity to get in. If you by any chance would be interested in doing a similar analysis for yourself, you are able to access this watchlist by following the first link at the top of the description. Otherwise, feel free to leave a ticker symbol in a comment below, and I'll consider adding that into the watchlist myself. Maybe you could share some interesting opportunities in the market that I'm still missing. So we went through Microchip's history, but how about expectations? Where do analysts think the stock will be trading at next year? Here we have information on 24 price targets from analysts. Those targets range from the lows of $67 to the highs of $125 per share. The average out of it is at $85.89, and currently the stock is trading at $67.72. This means that for next year, analysts expect that Microchip will be trading higher for 26.8%. Now let us take another angle. Here we have information on earnings estimates from 23 analysts for next year, and on average they expect that Microchip will be bringing $5.73. If we assume that the price-to-earnings ratio remains the same, then on average analysts predict that the stock price next year will be going up by 0.9%. The next part I would like to take a look into are Superinvestors. Currently there are 2 portfolios holding the stock, and one of them recently reduced on their position. So Dodge and Cox are currently holding over 20 million shares. They have sold 0.42% of their position, and the stock now takes 1.42% of their portfolio. But that looks to be a decent position at almost $1.2 billion. Unfortunately, the second holder is way smaller, so Jensen Investment Management is currently holding 116,000 shares, valued at almost $7 million, taking up only 0.06% of their portfolio. So only 2 portfolios are holding, but since one of them reduced on their position, we could say that overall Superinvestors are net sellers of the stock. Now let's also take insiders. So in the last 6 months they managed to make 2 buying transactions, totaling at almost $460,000, but then also sold 8 times, summing to $1.3 million. Now they have sold 3 times more than they bought, but what's different here than we are used to is that there are at least some insiders who are willing to go long. Now the last part we'll take a look into is the price chart. So on August 3rd it went up to the 300-day moving average, close to $74 per share. Relative strength index was over 70 at 74, and the 12-day moving average was going way over the 26th one. But that proved to be a decent resistance, as on the next day the bullishness went away. In a few trading days on the 9th, we saw the stock bottoming at $67.10, going closer to that 100-day moving average. The relative strength index went down to 54.8, and we almost saw that bearish crossover in the lines of the MACD. Now for the next 4 trading days we had another surge, the price went over $74 per share and crossed that 300-day moving average. But that changed shortly. On the 18th we were closer to the 200-day moving average, and we had the 12-day moving average of the MACD going under the 26th one. On August 26th the price opened at $70.31 and lost over $4 per share, closing at under $66. Relative strength index went under 50 to 43, and the lines of the MACD consistently moved further apart. Now on September 1st we saw some sort of a bottom at around $63 per share, with the gap of the MACD lines narrowing, and then on the 9th the stock jumped a bit, where the 50-day moving average crossed over the 100. So I believe that we have an interesting opportunity right now. We just saw that support of $64 per share, the 50-day moving average crossed over 100, so we already have some bullishness there, and if we take a look into the MACD, we will soon be getting a bullish crossover, where the 12-day moving average is going over the 26th one. So I am looking for the share price to go up from here, closer to that 300-day moving average, that is currently at around $73 per share. So we have looked through all the metrics I wanted, and now let's take a quick recap of what we found. There has been some sideways action in revenue in 2019 and 2020, but after that it has been consistently moving up. Price to earnings ratio is quite low, as we now have it the second cheapest of the last 5 years. Interestingly enough, they haven't been buying back shares, and in 5 years increased the number of shares outstanding by 76 million. Now the dividend payout has been consistently moving up, especially accelerating in last 2 years, and the stock is now trading at a dividend yield which is 22.32% higher than its 5-year average. Analysts are also bullish, as they are expecting that next year the stock will be going higher up to almost 27%. But Superinvestors aren't that convinced. Only 2 funds are holding and 1 sold a bit, but at least insiders are buying a bit to offset those sells. After looking into the chart, we recently saw a support at $64 per share. The 50-day moving average just crossed up over 100, and we have the relative strength index still at around 50. So quite an interesting place to start a trade, as we'll soon get a bullish crossover in the lines of the MACD. I am planning my next resistance closer to that 300-day moving average, which is now at around $73 per share. So if the stock does go up, we'll be setting my limit at exactly $70. And that was it for today. Make sure to support the channel and leave a thumbs up under the video. What do you think, is Microchip Technology a worthy pick right now? Share your stance on the name or your position in it in a comment below. If you would by any chance be interested in getting access to my notes, then consider memberships. By becoming a member you will get access to Discord, where I share all my Google Sheets documents and all the buys and sells exactly when I do them. This could be a great option to track my moves closely. Last week I've looked into several other companies, so if you are interested in any of these, then click on a video that is currently on the screen. And that was it from my side. Thank you for watching, and I will be seeing y'all in the next one.